Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Monday, March the 10th, 2008. The headlines out of Switzerland this morning read, dollar dropped to record lows on Friday before rebounding on Fed's liquidity move. The dollar rebounded from record lows on Friday as a Federal Reserve liquidity injection fueled some speculation the central bank might hold off on cutting interest rates aggressively even after a sharp contraction in U.S. payrolls. Profit-taking and short covering also helped support the dollar after 3 days of successive sharp gains in the euro, which brought the European currency to historic peaks. The Fed announced a series of term repurchase operations totaling $100 billion to ease liquidity pressures in stressed financial markets. This was overshadowing a Labor Department report showing U.S. employers cut payrolls for a second month in February. Interest rates futures reflected reduced views of the chances of a 75 basis point cut in the Fed's benchmark overnight lending rate at the March 18th meeting to 96% from 130% earlier. The Fed fund rate target is currently at 3%, after being lowered by 225 basis points since mid-September. On Friday, after the February payroll reports, the euro initially surged to 154.62. The 63,000 jobs decline was the biggest monthly drop in nearly 5 years. Economists had forecast that 25,000 jobs would be added to the payrolls last month. The euro-dollar traded down 18% to 153.56 as investors considered the U.S. interest rate outlook. The dollar Swissy slumped to historic lows at 101.34 before recovering to trade up at 102.23. The dollar yen dropped to its lowest in 8 years at 101.42 before regaining ground to trade at 102.68. The Fed said it would increase amounts in its term auction facility auctions on March 10th and March 24th to $50 billion each, a rise of $20 billion from the amounts announced for each of these auctions. This measure might ease pressure on the Fed to cut interest rates steeply. Aggressive monetary easing has erased the dollar's yield advantage against currencies like the euro. The European Central Bank has kept its refinancing rate at 4%, citing rising inflation pressures. The ECB's President Jean-Claude Trichet on Thursday dashed expectations of a rate cut anytime soon, with the central bank upwardly revising its inflation forecast. The dollar was relatively stable in the Asian session, with some slight gaps at the open. Given last week's moves in the foreign exchange and commodities markets, the quiet and orderly open was welcome. Last week's soft payroll data confirmed the U.S. recession is underway. Historically, we have seen that when an economy stalls, events spiral downwards very quickly. The 101,000 decline in payrolls last month indicated that the U.S. is past the breaking point. We expect, therefore, the economists to revise their GDP and interest rate forecast downwards. These sudden revisions mean that some of the economic weakness is not priced in. This, in turn, should support the euro, and we believe thereby that the euro-dollar will continue to move towards 155 in the near term. The major news this morning was the sharp decline in China's trade surplus in February to 8.6 billion versus 22.5 billion that was expected. This data was probably skewed by Chinese New Year and the massive snowstorms, which basically halted internal movement of goods. This might possibly be the first signal that the decoupling theory may yet be nullified. Japan's core machinery orders for January was released with a bang, jumping by 19.6% month-to-month against an expected 2.6% month-to-month. Japan's core machinery orders for January was released with a bang, jumping by 19.6% month-to-month against the expected 2.6% month-to-month. The year-to-year figure also rose by 11.4%, the quickest increase since 2006. However, the surge was based on particularly large orders for a few select items. In particular, orders for electric generators and iron and steel were up massively, so it is important we don't read too deeply into this indicator alone. In the UK, industrial productions for January and PPI for February will dominate the calendar. These two figures will highlight the BOE's position. While slowing economic activity is evident, strong pipeline price pressure will keep aggressive rate slashing on hold for now. That concludes our news for today. We hope you're finding this helpful in your trading and that you have a great trading week. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you will find information about our Traders Training Center, where our motto is Traders Helping Traders Succeed in Forex. And also there is a link to our Yahoo forum, also called Succeed in Forex. We hope to see you there soon. We will be here again tomorrow for another Forex market news broadcast. We hope you'll be able to join us then. Until that time, happy pipping.